by underscoring Bitcoin's unique potential. It's either going to be worth zero or millions per coin if it realizes its role as a store of value. Unlike early fears of Bitcoin being unregulated, it's heavily monitored today. The IRS treats it as a property, and the US Securities and Exchange Commission has approved spot Bitcoin ETFs, making it accessible now for institutional investment. These ETFs have become some of the most successful on Wall Street, drawing in billions worth of capital, which is a strong vote of confidence from traditional markets. When Bitcoin first emerged, many feared it would be crushed by government's crackdowns. Saylor recalls similar doubts back in 2013, but over time we've seen gradual acceptance with regulatory bodies like the IRS, the US Securities and Exchange Commission, and global institutions acknowledging Bitcoin as a legitimate digital property. Major endorsements from Fidelity, CME, and others have solidified its standing. For Saylor, these institutional backings are critical signs that Bitcoin's legitimacy isn't just a passing phase, but an accepted reality. Looking forward, Saylor sees Bitcoin as an asset that could one day rival global reserve currencies. Unlike fiat currencies, which are often manipulated by central banks, Bitcoin is decentralized and scarce, making it more resistant to control by any single entity. Saylor highlights that Bitcoin's uniqueness lies in its lack of reliance on government backing, which could make it one of the most valuable assets for preserving wealth independently from traditional currency risks. Now, Saylor emphasizes that Bitcoin's trajectory isn't tied to any specific political outcome, but the upcoming election in the US may provide regulatory clarity, boosting confidence for investors. Now, whether Bitcoin is viewed as a counter to inflation, a long-term investment, or an alternative reserve asset, its role is expected to grow stronger. This clarity would help both retail and institutional investors navigate the market, making it even more appealing for anyone seeking asset stability. In closing, Saylor's insights offer a powerful vision of Bitcoin as a lasting store of wealth, especially in times of financial uncertainty. With regulatory support now growing and major financial institutions integrating Bitcoin into their portfolios, this digital asset is no longer a fringe investment. It's increasingly seen as a safeguard for wealth, one that could preserve and grow value across generations. Now, if you're interested in the future of finance and Bitcoin's role in it, be sure to subscribe for more insights as we track Bitcoin's journey towards global adoption. So until next time.